trade recap. How did Lonnie get his trade idea? The full breakdown of the actual trade execution, reverse engineering it, seeing how we can continue to improve, continue to get better, and continue to refine our trade strategy for success. Let's get into it. We're going to first start off on the daily time frame scaling down, then we're actually going to scale back out from the micro time frames back to the daily, where we could have actually avoided trading. Starting off on the daily time frame, what happened? Well, last week we had ended up making this major retracement into this daily PD array, daily fair value gap, also having it be the equilibrium of this daily range. Now, I ended up being bearish this morning. Why was Lonnie bearish this morning? Well, I was bearish primarily because of the fact that we began to showcase strong displacement of the body candle within this bullish PD array. Now, if you guys go in and rewatch my video from 4 days ago, it should be on either Tuesday or Wednesday. I was actually still bullish more than bearish. You may be asking why. I apologize, it was Thursday. You may be asking why. Because the days prior, you could see right here, we were showcasing a rejection off of this daily imbalance. We were wicking it. Within those wicks, we had multiple liquidity sweeps and multiple pushes back to the upside. Now, that was not the case here. We were not wicking this daily PD array, but instead having a strong candle closure within it. This began to showcase to me possible signs of bearishness rather than bullishness, possibly targeting this weekly low as liquidity, scaling down to the 4-hour. What happened? Well, on the 4-hour time frame, this is when I will showcase all of our drawings, but for simplicity's sake, we will move these over here. Let's ignore these for now. Focus on price action. What happened on the 4-hour? Well, on Friday, we ended up making this major retracement to the downside, validating this 4-hour PD array. Now, we would have not validated this 4-hour PD array if we weren't looking to possibly be bullish back to the upside. However, if you can see right here, we had two conflicting PD arrays, having this bullish PD array and the opposing bearish PD array. This right here, we have done the note on it many times, and I have showcased it to you guys many times. This is showcased as improbable price action, 50-50 price action right here, when you have two conflicting PD arrays. Let me bring the image down for you guys to see. We have a bullish PD array right here and a bearish PD array right here. This is low probability price action. Now, you may be like, well, Lonnie, this low probability price action, why did you execute upon it? We're going to continue to scale down. But for now, keep this in mind. We have two opposing PD arrays. Now, scaling and even, three, with the beginning of the newly formed 4-hour PD arrays being formed right here and right here. But let's ignore those for now. We'll come back to those. On the hourly time frame, how did Lonnie ended up getting a bearish bias rather than a bullish bias? How did he even get the narrative of being bearish rather than bullish on the hourly time frame? When going to the hourly time frame, what do we see right here? Well, I did keep in mind the acknowledgement of this 4-hour PD array. However, I wanted to see if we had validated any sort of confluence on the hourly time frame for this 4-hour bearish PD array, which I did see we did. Now, a lot of you guys may conflict with me and be like, well, Lonnie, blah blah blah, overall bullish trend, equilibrium, yes. However, let's explain this real quick. On the bearish time frame, what do we have? A push to the downside. How did we validate this push to the downside in order to execute market open? Well, we originally had this bullish PD array. If we were bullish, we would have continued to validate this, hold it, and continue to the upside. Now, we ended up invalidating it with this candle right here. this candle closure to the downside showcased the invalidation of this bullish PD array. To me, beginning to showcase signs of bearishness rather than bullishness. Right here, we did have a lower PD array on the hourly time frame. We can see continue to make that push to the downside. Now we had a very strong wake of rejection, validating, still holding this bullish PD array. But now, where did Lonnie's bearish bias come in? My bearish bias got paired with the invalidation of this bullish PD array. In my mind, I thought if we were bullish, we would have originally validated that PD array, continuing to the upside, never having to make the deeper retracement for this PD array right here. Now, let's acknowledge this. I'm realizing this just right now. This is actually the equilibrium of trend, making this bullish PD array fair value gap retracement. That is definitely some confluence we could have looked out for when going in and executing on shorts. Going on the 15-minute time frame, we see we had accumulation right here. On the 15-minute time frame, you will also see it on the 5-minute, a sweep, a push to the downside, and a strong leg back to the upside. Now, typically you guys would be like, well, Lonnie, that's your setup, right? Accumulation, manipulation, distribution. If we open my Obsidian and go to our 16-week goals, we see right here, volume KPI, go right below it, model, AMD, liquidity sweep, market structure shift, imbalance retracement. Lonnie, that's your setup, is it not? Yes, it is. However, we like to see strong displacement to the upside. This candle closure almost failing to showcase that strong displacement, to me, was not enough confluence for us to say we are bullish right now. I needed more confluence. How would we get that extra confluence? By beginning to form new bullish PD arrays, beginning to showcase strength and bullishness. Now, upon sweeping this, making that push back to the upside, we actually made a push to the downside market open. Going on to the 5-minute time frame, we showcased a perfect sharp turn model. Now, this is actually something I wanted to execute upon, but waited due to wanting to see an extra PD array get formed. Right here, if I mark out on the charts, we had our 5-minute range from this low to this high coming up, appearing to have taken out this liquidity residing above here, not this. Beginning to invalidate this bullish confluence and begin to validate this bearish confluence, showcasing our sharp turn model. What is our sharp turn model? Put very, very simply, we have two. Our type 1 sharp turn model is the invalidation of a prior opposing PD array. So right here we seen bullishness, we invalidated it and created a respected bearish PD array, which we validated. That's our type 1, and our type 2 is simply that. However, without the need of this first opposing PD array. Now, we see that we ended up retracing, validating this, pushing back to the downside. This to me showcased enough bearish confluence at the time in order to execute. Why? Because we ended up forming a new bearish PD array, validating following that bearish trend. This to me was A+ conditions in order to take a short. If we take a look at the notes, we can actually see my thought process in real time. Right here, I said if we are able to form a new P array off of validating this one right here prior, allowing us a trade entry, we can set our trade stop loss at the most recently formed high of price action. That was our invalidating high. Now, that's exactly what we did. We have that first node out of the way. Let's move this negative confluence and go to this one. In order to see bullishness validated, we will be waiting for the same thing. New PD arrays being formed off of prior PD arrays. We can move this right here. That's exactly what we wanted to see here, continuing higher, just like I said. And then I also wrote this note: if we begin to invalidate the bullish PD arrays and showcase signs of bearishness forming new opposing fair value gaps, that would showcase a sharp turn. If we do not, we will continue to validate bullish price action, continuing to the upside, allowing us to see whether or not the 4-hour PD array will hold. What 4-hour PD array is Lonnie talking about? This one right here. Going back to the 5-minute time frame. Upon executing, we immediately seen this PD array become invalid. You could see we got liquidated within 5 minutes. This is exactly how our trade entry looked. We were looking to execute at the 50% mark, the equilibrium of this fair value gap, having our stop loss above this high right here, targeting these hourly lows, which was also within the 4-hour bullish PD array. This was our outlook on the trade idea, which we unfortunately did not see it play out. We continued back to the upside, stopping us out, having a nice validating stop loss above this most recent swing high, continuing further higher. Now, after getting stopped out, I wanted to see, okay, well, we had negative confluence showcasing the invalidation of this PD array on the 1-minute time frame. If we scale down, we could see immediately we were not showcasing any signs of bearishness on the 1-minute in order to validate this PD array on the 5-minute time frame. Now I wanted to see whether or not we missed anything. When opening my TradeZilla and pushing it down here so you guys can see it with me, we have all of our trade images. If I go to the 5-minute time frame, upon our execution, you can see this is exactly how price action looked. Had bias bearish, exact note right there. It's all simple. Bam. When we got stopped out, and we were possibly looking to understand where market could draw toward next, whether we were bullish or sweeping out liquidity in order to continue lower. I made an additional notes tab for this. Why do we take this trade versus what was the opposing probability in order to not take this trade? We talked about this before. Arguments. We always play into the side of price action that showcases the better argument. Now, the points have to be stronger for either or of whatever side in order for us to take that trade. Let's analyze both sides and also see simply the confluence in order to stay out of the trade, and see and make our own argument right now which side had better probability. Why we took this trade: daily time frame beginning to close bearish within a bullish PD array. Okay, that's beginning to showcase signs of bearishness. We see that on the daily time frame. This is how we got our bearish trade confluence. Okay, solid. What next? Conflicting PD arrays. This right here already showcases 50-50 price action, but yes, we did have conflicting PD arrays. If we go on the 4-hour, right here and even right here and right here, conflicting PD arrays, and even right here that we formed. So conflicting PD arrays, closure within opposing 4-hour PD array. What does Lonnie mean by this? Same thing as the daily. We close with a body close within this 4-hour bullish PD array, showcasing to me possible bearish trade bias and the beginning of invalidating this bullish PD array. Now, hourly beginning to invalidate opposing PD arrays, discount bullish PD arrays. Exact same thing. If we go right here to the hourly time frame, began to invalidate this bullish PD array we mentioned earlier. Going back to TradeZilla, sharp turn model on the lower time frame on the 5 minutes. This was a very, very valid sharp turn model. It was perfect sharp turn model. It was a perfect type 1 sharp turn model. We've seen right here the invalidation of this bullish PD array beginning to showcase bearishness, and then the validation of this bearish PD array. Perfect sharp turn model. If we would have executed upon this, however, it was very early market open, same outcome most likely would have happened. However, would have been stopped out in profit, just like that. Bam. That was our sharp turn model to the downside. Going back to TradeZilla, new bearish PD arrays forming off of validation of prior PD arrays. So you see, we have solid bearish confluence. This wasn't a horrible trade. It wasn't even a bad trade. It was actually a really, really good trade if we put it and apply it. It was actually a really, really good trade if we're applying it to an actual playbook. This was an amazing trade with amazing confluence, even bearish confluence, although yes, we did take the loss. It wasn't a sporadic trade. It wasn't a forced trade and improbable market conditions. More so, of course, it was a conflicting bias, but overall, we had clean price action. We had extra confluence. We waited for proper confluence and executed upon what we thought was valid and simply got stopped out. But I wanted to see the reason for us getting stopped out. Why did we get stopped out from this trade? What could have negated us from even maybe taking the loss or taking the losing trade in the beginning? Going back to TradeZilla, opposing probability. This is bullish probability. Macro time frame daily trend equilibrium. I mentioned that earlier. On the daily time frame, this is a macro time frame retracement for equilibrium discount right here. Now, that's the first one marked down. Retracement for daily PD array, seeing that just now. Clear validation of 4-hour time frame. Fair value gap right here on the 4-hour time frame. We see the clear validation of it with that beginning pushback to the upside. Formation of new PD array off of prior PD array validation. The same thing we validated right here on the 5-minute time frame. We can actually validate that on the 4-hour time frame. Came down, retraced, validated this, created a new PD array, and retraced back into that one. That is the exact same validation process as the 5-minute. Exact same thing. Failure to invalidate bullish 1-hour PD array. Which bullish 1-hour PD array, Lonnie? Well, the only one we actually ended up validating, my little munchkin, which was this one right here. Something that could have helped us to avoid taking this loss was actually waiting to see whether or not we would fully invalidate this. Now, I did jump in because on the lower time frame, we began to showcase signs of bearishness that we could continue lower. So I ended up pulling the trigger. I liked what I seen within the probability of bearishness continuing lower, and I did not want to see price action continue lower and possibly miss the opportunity of us having the fear of executing rather than the desire to go in and see the potential outcome and learn from it. Last one I wrote was a 5-minute accumulation, manipulation, and distribution. There's also one thing I didn't mention, but something I noticed was that we kind of had a sharp turn model on the hourly time frame right here. We actually came down and validated this bearish PD array and formed a new bullish PD array, making a retracement for it. This hourly sharp turn model, this type 1 sharp turn model, could have also showcased to us signs of bullishness if we were willing enough to pair the confluences together with it being within equilibrium. On the 5-minute time frame, we had the accumulation, manipulation, distribution right here. Bam, accumulation, manipulation, distribution. And now the extras. Confluence to stay out of the trade, conflicting PD arrays, failure to displace lower with strength on the lower time frame. The fact that we failed to displace lower with strength right here, invalidating this 5-minute PD array was also confluence. What else? And also failure to displace lower, invalidating the opposing 1-hour PD array. If we were bearish, this would be a completely different video, but, well, it would be the same video, but we would have invalidated this hourly PD array. So definitely could have waited for the invalidation of that PD array. After all that happened, price action continued back to the upside. We did look for a new trade entry, continuing bullish after seeing this new PD array get formed and seeing multiple bullish PD rays on the 5-minute get formed. On the 1 minute, we did showcase confluence of the validation of some of these PD rays. However, we continue to the upside, not allowing us a second trade retracement. The ultimate question: how can we improve from this? How can we continue to get better? Well, we see clear confluences on where we're improving with extra confluence, with the market structure, with our actual execution. Something I want to improve on is making our daily bias mechanical. If we can make our daily bias mechanical, it'll allow us a structure that we can continue to execute upon every single day and apply in order to put our chances higher within probability of being correct about bias majority of the time. We don't need to be correct about bias all of the time. Even if it's 7 out of 10 times, even if it's 6 out of 10 times we're correct about bias, with our risk reward, we will be very profitable. We want to keep it above that 60% range of our bias. However, for now, while improving, I'm willing to improve from 50% to 60 to 70 and further on as our time continues and as we continue to grow as a trader. Right now, we're doing very, very, very well with really breaking down these trades, understanding with the case studies, and learning a whole lot more. This was an amazing trade execution. It was an A+ execution, besides the fact that we were thinking conflicting price action, which then I would give it a B. But overall, the lower time frame execution, the analysis of it, the breakdown, even the confluence paired on why we took the trade and the opposing probability was all A+. You can see right here, this was clear signs of 50-50 price action. Why? Because we had 6 confluences for each. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. If you wait it out in Toy Theater, oh my gosh, I dropped my mic. As you guys see right here, 50-50, even probability, nothing too crazy. Something we would have wanted to see is maybe a little bit more signs of bearish probability, giving us a slight edge over the market. However, we didn't. That's okay. But I thank you all for watching this video. I hope you guys were able to take some value from this video. If you want to pause, you can read our daily analysis right here. And apart from that, I'm going to go do my trade journals. Journal your trades. Continue to improve. Continue to refine. And remember, never allow any losses, never allow any wins to get to you and affect you emotionally as a trader. The moment you do is the moment you become a victim to the charts. That is when you become a victim to your own greed and to your own ego. Let go of the ego, let go of the winning streaks, let go of the losing streaks. It's not about winning or losing, it's about learning. If we can emphasize the aspect of learning, we will all succeed in whatever endeavor we are doing, whether it's trading, dropshipping, e-commerce, SMMA, growth operating agency, doesn't matter what it is. So I love you guys. Keep going out there, keep learning, keep grinding. I'm rooting for you all. Peace.